Bloomberg Audio Studios. Podcasts, radio, news. You're listening to the Bloomberg Intelligence Podcast. Catch us live weekdays at 10 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. Listen on demand wherever you get your podcasts or watch us live on YouTube.
The newest company to get into the energy sphere, admittedly in nuclear energy, is the Trump Media and Technology Group. DJT is the ticker, of course, and it's President Trump's company, basically a social media company because it owns Truth Social, but they are now in nuclear fusion. So we want to understand what's going on here. Simon Casey is Bloomberg News' managing editor for Energy and Commodities. Simon, Trump Media and Technology is now a nuclear fusion company? How does this work?
Yeah, I don't think anybody had this on their bingo card this morning. We certainly didn't. It appears that they are a fusion company as much as they're a social media company or a crypto company now. They're merging with a company called TAE. It's as far as we can see, a credible fusion player. They've been around for over 2 decades. They've raised money from the likes of Goldman Sachs, from Google, and various other big investors. I think Chevron, the oil company's venture capital arm, has put money in as well. This deal gives them, I believe, something in the region of $200 million of a cash infusion to continue their work. For DJT, they are touting this as a pivot to the exciting world of nuclear fusion, which is the future of cheap, affordable, abundant energy for everybody. And that's been the dream for decades, of course. There was a breakthrough in 2022 where fusion was actually created for a brief moment in a laboratory, it's Lawrence Livermore Laboratory. And that was a fairly significant achievement. And it's been recreated since, but only sort of sporadically and not at commercial scale. We're a long way off. It's very technically challenging to do this, let alone commercially.
I'll ask the elephant in the room question. Where are we on conflicts of interest with this president and this administration and investments in business and that type of thing? Where's the market kind of evolved to? This is before the Trump administration. This stuff, I would say, rarely happened.
It almost, I struggle to remember it happening now. It's commonplace, isn't it?
Yep.
And let's be clear, the Trump administration has a very robust, I would say, very sort of clearly outlined energy agenda, an energy dominance agenda. They are pro-fossil fuel. They also support the nuclear industry, and the nuclear industry has has gained a lot of momentum since that discovery I mentioned in 2022. But since Trump has come in, he's been very supportive of the nuclear industry to build new nuclear reactors. Look, we have serious issues here in this country with with power demand from the AI industry and how we're going to service that demand and keeping a lid on prices. The Energy Secretary, Chris Wright, is also very pro-nuclear, been very vocal on that front. But yeah, it's kind of amazing, nevertheless, to see this kind of deal this morning.
Well, just looking at the DES function for DJT, 12 employees. That's, I guess, in the trailing 12 months, $3.7 million of revenue, $1.3 billion of cash, though, $950 million of total debt. So what does Donald Trump company, Trump Media and Technology Group Corporation, what is that? What do they really bring to this deal other than maybe some cash?
The name, I guess, the ticker.
Okay. Right.
It's to a large extent, it is a meme stock, I think it's fair to say. And with a cash pile, and if they can use some of that cash pile to fund nuclear research and development, then maybe that's a sensible use of that cash.
Yeah, name recognition goes a long way in 2025 and 2026. Simon, how big is the investable universe of nuclear companies right now?
Wow, that's a good question. I mean, in terms of fusion companies, I think this will be the first company, fusion developer, that's actually listed on a stock exchange. So there's a handful of these companies. Some of them on the East Coast here. There's a cluster around the Boston area, and they're all privately held, apart from this one. In terms of other nuclear stocks, there's a handful of them. There's a company called Fermi, which has had a lot of interest recently, which is trying to develop a campus down in West Texas that would include AI data centers and potentially a new nuclear reactor to power that data center. That's a very ambitious project. Then you have a handful, as I say, of other companies that are trying to develop small, medium-sized nuclear reactors. And this is the other thing that the Trump administration is very keen on, to kind of lower the cost of entry, if you like, into the nuclear industry.
What can you tell us about the timetable associated with commercially deploying utility-scale fusion power companies?
So, well, if we're talking fusion, it hasn't been proved at commercial scale. So we're probably talking decades before, I would say. It's fair to say.
I'm just looking at the Bloomberg reporting, and the combined company plans to begin construction next year on the world's first utility-scale fusion power plant. So that's going to take a long time to construct that.
I mean, we don't even know if it can work at a commercial scale. Now they can pour the concrete and build the foundations. Nothing to stop them doing that.
And this sounds like a multi-billion-dollar type of plant for these things.
Potentially, no one's ever built one before, so we don't really know. I mean, we know that conventional fission reactors, which have been around since the end of the Second World War, the last one built in this country went over budget, and it was about over $10 billion, I believe.
Who's going to provide the financing on all that?
I think if it can work at scale, then a lot of more investors might take a look at this, including mainstream investors. But it's so sort of hypothetical at the moment. It's almost impossible to say. What is the return on investment going to be for something like that?
It's early innings, not even first inning at this point?
This is very early innings. I mean, the sort of the well-worn joke, it's not even funny anymore, that nuclear fusion, it's the future. And it's always been, it's the future 30 years out, and it always will be 30 years out. That's kind of where we've always been. It exists in the textbooks. Mm-hmm. It now exists in the laboratory, which, don't get me wrong, is a big step forward. But transferring that, creating nuclear fusion for a fraction of a second, and then evolving that to where it's on all the time and being able to power a town or a city is a quantum leap.
SMR, small modular reactors.
Yes.
That seems like pretty cool technology to me, but that's still years out.
That is, again, probably years out because it's technically challenging, but it does exist. I mean, you use them in nuclear submarines and aircraft carriers.
Yep.
So there's nothing to stop you taking one of those out of a ship and having it on land. The challenge there is actually possibly more regulatory. And again, that's something that the Trump administration is actively trying to address in terms of permitting reform and so forth. So there are companies that are listed that are developing these things. We haven't seen one yet that's been sort of produced, and it's been proven it can be manufactured at scale. But it's more achievable, I would say.
Stay with us. More from Bloomberg Intelligence coming up after this.
You're listening to the Bloomberg Intelligence Podcast. Catch us live weekdays at 10 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. Listen on demand wherever you get your podcasts, or watch us live on YouTube.
Paul, I think we need to take a closer look at Micron, given the roaring comeback it's made this year.
Yeah,
I mean, memory chip maker, that's an old school product.
Yep.
But it's having its day. Let's bring in Jake Silverman, Bloomberg Intelligence Semiconductor Analyst, to recap these results. Jake, let's start just with the big, massive gain Micron has seen this year, up 200%. What were investors pricing in, and did they get what they wanted with yesterday's earnings report?
Yeah, I think investors were expecting a little bit more of a subdued outlook for the second fiscal quarter, primarily just due to typical little bit of conservatism for management, but also the February ended quarter tends to be a little bit more seasonally weak. You get the December portion of that, but usually consumer products, PCs and smartphones tend to see a little bit of a sequential decline just off of strong holiday seasonality. We all kind of knew that pricing was going to be the most important factor going into the quarter, and obviously demand from AI is pretty strong. But there are areas like high bandwidth memory where Micron's actually somewhat constrained in terms of their ability to supply, just simply because they haven't invested in that much additional capacity, and they need to improve yields, and they're transitioning over from HBM3E to 4, which is to support NVIDIA's next architecture and other customers. So there's a few factors going on here that I think had investors a little bit more maybe conservative in terms of what they were expecting.
I don't know a lot about semiconductors, and I want to keep it that way. But what I do know is it's a cyclical business. Has this AI spending thing kind of evened out the cycles, or just throw the cycles out the window?
It's a little unprecedented. I don't think that we're necessarily at that point where we can say that there aren't going to be cycles, or at least not in the next, I don't know, call it 5-10 years, something like that. Typically what we see with memory, I'll just focus on that specifically. We tend to see something like 7 to 10 quarters, about 2 years plus of up cycles. And then what happens from there is that we tend to see some sort of cyclical decline, and that really is because of supply ending up being a little bit more supply growth relative to demand growth. AI is structurally limiting some of that. We're seeing AI inferencing demand being really strong. That's both for DRAM and NAND. At this point, DRAM is more important for Micron. It's a much larger percentage of their sales, and that's where high bandwidth memory is included in their revenue. And so what this does to the cycle, it's definitely extending it. It's elongating what we would expect, and it's making it a lot more difficult for investors, I think, to capture what will be the ultimate peak of the cycle. But on the other hand, we have to look at what's happening with pricing. If customers like PC, smartphone, automotive, run the gamut, if they can't get supply, someone's going to need to meet that, which means that Micron or their peers are going to at some point need to expand capacity. They're kind of working on it. They hinted at it with the additional capex increases for the fiscal 26 going up from 18 to 20 billion. But it's just a question of how fast and to what magnitude can they actually increase capacity.
Right. And I'm glad you bring that up because we know that the industry is shifting production to the more advanced technology for AI data centers, and therefore there's a shortage now of this less sophisticated memory chips for PCs. Doesn't that mean that Micron has the upper hand when it comes to Dell or HP, and they can call the shots more? I mean, what does a Dell, what does an HP do then if they can't get what they need? Yeah,
it's complicated. So Micron has to decide how they want to allocate that capacity that they have, whether that goes to PC. I think that when you're a larger customer like Dell, HP, you kind of have to just take the product at the price that Micron is offering it. Now, I do think if you could buy in larger volumes, you can, mitigate some of those price increases. But at the end of the day, you're kind of you're being dictated by the market demand, the market forces. But also, when prices have declined in the past, PC makers have also benefited from that. Yeah. So if there is a cyclical decline, which I expect to happen at some point, they'll also benefit from a decline in memory pricing as well.
Where does Micron manufacture its chips?
Yeah, so it's primarily in Taiwan, but also in Japan as well. And they have a fab in Manassas, Virginia, but they're also expanding now to Boise, Idaho, and they're eventually going to bring a fab online in New York. So it's pretty geographically
where in New York?
diverse.
Do we know?
Clay, New York.
Where's Clay, New York?
I'm going to say it's
upstate.
Up near Cornell.
Upstate. Okay. Yeah. So not near us.
No. Upstate. There's, I didn't know there's upstate, and I think there's mid-state. Some people call it.
Well, everyone in Manhattan thinks upstate is like Westchester. So
right. Yes. But I learned this during the pandemic. There's different regions of the state of New York. I have to go Google that now. I wasn't aware of that.
Well, you're a New Jersey guy, so there's just the city, and then that's it.
That's exactly right. Stay with us. More from Bloomberg Intelligence coming up after this.
You're listening to the Bloomberg Intelligence Podcast. Catch us live weekdays at 10 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. Listen on demand wherever you get your podcasts or watch us live on YouTube.
Activist investor Elliott Investment Management has built a stake of more than $1 billion in Lululemon Athletica. The stock is up 6.5% today, but I think the problem is it's down 42%. Year to date. So let's see what's going on over there at Lulu. Poonam Goyal, senior U.S. e-commerce and retail analyst, Bloomberg Intelligence. She's based down there in Princeton. She joins us. Poonam, what's going on with Lululemon? What's the problem here? And what do you think Elliot believes it can do to fix it?
The problem is that they've had plenty of execution missteps over the past 2 years, led directly to product innovation. And as they search for a new leader at helm, the candidate that he's outlined seems like a strong one. She's led a turnaround or helped lead a turnaround at Ralph Lauren in the past, at Coach, both iconic brands that struggled in that time, and she helped lead that turnaround. So I think Lululemon, while a different turnaround, she has the track record, if she is put at the lead, to really help drive this turnaround.
Poonam, tell us a little bit more about the role of Chip Wilson. He founded Lululemon, and he's been making comments, really agitating for change, accusing Calvin McDonald of killing innovation and some serious strategic missteps. But he is not part of management at Lululemon. So why does his voice carry such weight?
I mean, he was the founder, right? He did find this brand. He did grow this brand very quickly into a strong, loved, well-known brand. And I think the brand emerged by having great product. Like if you think about Lululemon in the past, it was all about product. You could not find Lululemon product or something like it anywhere else. Leggings that made you feel good, leggings that performed. That's how they made their mark. And the question is, what's next? Have they been able to innovate fast enough to prevent competition from encroaching that space? And the answer is no. And that's the struggle that they're having right now.
Is it just a question of money, putting more money into, I don't know, research and development of leggings? I don't know how that works.
I think it's execution, right? It's about staying ahead of trends and really innovating faster than competition. Clearly, today with AI and other mediums, there is the ability for a competition to come on faster. But that said, Lululemon was ahead of the game and they've kind of fallen behind. So they do need someone who knows the product story and can lead a product-led turnaround.
Stay with us. More from Bloomberg Intelligence coming up after this.
You're listening to the Bloomberg Intelligence Podcast. Catch us live weekdays at 10 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. Listen on demand wherever you get your podcasts or watch us live on YouTube.
More earnings out there, this time from our friends at Darden Restaurants. Put out some, I think, surprisingly pretty good news out there. Let's check in with Rachel Fuller. She covers the restaurants for Bloomberg News. She joins us here in our studio. Rachel, what did we hear from Darden today?
Yeah, so the company has done well. Today, it saw same-store sales rise. It actually raised its sales forecast, and stock is up as much as 4.5% today, which is the biggest gain in almost 7 months. And I mean, while sales are up, though, its profits have kind of taken a hit because of high beef prices.
Yep.
You know, we've been hearing about that. That has affected their earnings for a little bit, but now they do expect beef prices to hopefully come down in the near future.
Okay. I guess their fast casual is kind of their stuff. So like, I'm sitting down, I've got a waitress, I'm doing all that stuff, but it's talk to us about their brands and what they're saying about their brands.
Sure, yeah. So I guess they would call themselves a bit more casual dining.
Okay,
yeah,
okay.
than fast casual. I guess, you know, this industry has their terms. But yeah, they're actually kind of saying that it's actually still been pretty resilient. You know, their target audience are these like middle and high income customers, and those haven't been so much affected by the economy. Maybe they're a bit more worried, but that hasn't really stopped them from spending. And, you know, they see these restaurants as kind of a treat to them. And, you know, for many consumers too, I think they're starting to see these restaurants like Olive Garden and Longhorn Steakhouse as a place where they can kind of get pretty good food for, you know, a pretty good price right now, especially when you see places like Kava and Chipotle, which those are your fast casual places. And, you know, they're pretty expensive now with inflation. And so the comparison is, you know, like as a consumer, you know, why don't I just pay a little bit more and I can get a better experience at an Olive Garden?
So they're raising their full-year forecast. Is that more on the revenue side, or is that costs, or what are they doing there?
So they actually increase their same-store sales, the comparable sales, and so they do expect, you know, consumers to keep coming. You know, they have other tools in their belt to kind of keep drawing the consumers. Like they introduce like smaller portions. They are on Uber Eats now, but yeah, they actually maintain their earnings per share guidance just because of commodity prices.
So again, what are some of the? Are you seeing differences within the restaurant industry? You know, from the lower end to the higher end about just sales trends, how their customers are doing, or is it a different discussion?
I think it's a different discussion. I think we've heard a lot about how a lot of the fast food chains, a lot of the fast casual chains, you know, they're still getting hit by your lower income consumers kind of pulling back, you know, like inflation and commodity prices are high, whereas your casual dining restaurants, you know, they seem to still be pretty resilient. Like Chili's is another example. They're still able to draw that consumer, who are still able to spend a little bit more.
So as a reporter covering the restaurant industry, you got to get out of New York City because we don't have a lot of that stuff
that's
here.
True.
So you got to travel around the country, right? Go to where the Cracker Barrels are and the Chili's are.
Yeah, you definitely have to. I think for most of us, I mean, in New York City, unfortunately, you have to try to get into Times Square just to get that buy one, get one pasta, which is not the most fun.
Yeah,
experience.
exactly. So what's the format, what's the buzz within the restaurant industry these days about like maybe the format, or is there a new cool company? Like for a while there was Shake Shack and all the burger stuff and the smash burgers and all that stuff.
I mean, I think Chili's was the cool company for a bit. They had really good social media. A lot of their items were going viral. I think with Olive Garden, I think what we've seen today is the popularity of smaller portions seem to be something that consumers are gravitating towards. Especially with some of them, going on weight loss drugs, some, becoming more like health conscious. This might be actually a good play for them.
Yeah. So was that ever a thing with the GLP-1 drugs in restaurants, or is that faded?
I think they're still trying to figure it out. I think we are still trying to figure out too, like how many people are actually really going to go on the drugs, how, are people going to go off it? I think they are also watching it. They did say they are slightly affected. Like they're seeing some diners cut back on appetizers and desserts, but they also say that it's mostly alcohol, which we have that they're pulling back on, which is the longer term trend.
This is the Bloomberg Intelligence Podcast, available on Apple, Spotify, and anywhere else you get your podcasts. Listen live each weekday, 10 a.m. to noon Eastern on Bloomberg.com, the iHeartRadio app, TuneIn, and the Bloomberg Business app. You can also watch us live every weekday on YouTube and always on the Bloomberg Terminal.